What's up, what's up, what's up? How we all doing? Hope you're all doing well. Seems like forever since we've been live, but of course we were live last week. So as always, we just want to do a massive shout out to everyone that has liked, commented and shared the videos. It really does mean the world to us. We appreciate it so much, you know, like the support and the just everything that you guys do. It means a lot and we do appreciate it. So if you haven't already, hit that subscribe button and drop us a like on this video. And of course, you can go back and look at the previous videos. Not forgetting the Keep It Simple series. We have part 5 coming for that this week. There has been a small delay on those videos, but as many of the members within the inner circle and some of the more familiar members will know, that I have been away in Kuwait for a week working with an investment company known as Nesab Investment. We will be doing some videos as well on Nesab and the way that they operate in terms of institutional liquidity. And of course, they are now a confirmed partner with myself and Pip Surfing Society, so you can check them out and you will be able to know in confidence that they are a trusted firm. They're not one of these scam, investment firms that you see, which they unfortunately are very common. But as always, you guys are here to see the weekly markups, so let's get into it. So we're starting things off with a look at last week. We didn't actually post the gold markup. We did show you guys in the live stream what we were expecting, but we didn't actually post it. So let's take a look at what we had last week. So last week we gave out the principle that price action may just continue higher, and the target was our major high right here. And we expected price just to follow the upwards direction. If we were lucky enough to get a pullback into the hourly area of demand, we said that we would look to buy from that area. And if we didn't, then of course we wouldn't buy from that area. We would just wait for a short-term buy to appear within some of the smaller areas, which is actually what we ended up getting. Now, when I play this, you'll see that we got a nice pullback into the area, and then we had a beautiful push right up to that target high that we mentioned. So it actually played out almost perfectly to the best case scenario that we were looking at. Worst case scenario for us, that we had a bullish bias and price just sold off. But we actually had a beautiful pullback, tap into the hourly area of demand, and then a lovely push to the upside. So it was so perfect, you could not really ask for anything better. I mean, it really was amazing. So following on from this, we of course have the latest markup, and the latest markup that we have is this one here for the 29th, which was posted 16 hours ago, as you can see. Remember, if you haven't, head over to my TradingView account and drop me a follow and a little like and a comment on the ideas, because again, that helps us reach new traders that maybe could use the help in terms of just understanding that following the market is simple if you just keep it simple and you keep the relativity correct, rather than trying to expect everything to reverse when it's going up and vice versa. So based off of what we had this week, we're looking at the liquid lows that are stored just below our area of demand. We of course have the same higher time frame trajectory for price action to travel higher, and we have liquid highs created because we're traveling in an uptrend, right? Every high that's created becomes a new target, becomes our liquid. So we're looking at price action traveling up to this area, taking this, and from here we're expecting either a bullish movement higher, or we could see a sweep of this and a sell back down. Now remember, there is going to be fundamentals that more than likely will clash with this and cause it to play within a certain movement, but for now we're looking at the basic principles of price, which are: where's our major area of demand? Right here. Where's our liquidity? Right here. Where's our target? Here. So we have an area to look to buy from, which is the current price action up, or the area of demand up. If these areas give us a push, but ultimately you see a sell-off, you can look at the liquid high, the trajectory lows, or price failing through the area of demand to sell lower into ultimately which will become the liquid lows because we're changing direction. Let's go on to gold, because gold now is the next markup. Now, we have, of course, seen a few things happening on gold, and this is, of course, fundamentally driven. Now, like I said, last week we didn't actually post a markup. We just gave it to you in live. That was actually a mistake on our end, but you know, mistakes happen. So if you haven't actually checked that out already, then head over to the last week's weekly outlook and you'll be able to see the gold markup that we posted, and you'll be able to follow that for the best understanding of what I'm showing you here. But of course, it's not, you know, you don't need to. It's not a key point. You don't have to follow the previous video to be able to know what I'm looking at. And this is why the simplicity of these charts is so important, because it's not about being up to date with every single thing that I've marked up. It's about just understanding the principle of where price sits currently. Where does it sit? What's the probability for it? And then that's all you need to be able to make a consistent bias directional move within the market. So again, same thing this week. We have a clear upwards momentum with upwards potential in terms of movement. We swept out some short-term lows within here. Price action had the potential to just run bullish straight up to the high. As of now, I'll show you where we are, but we looked at the short-term trajectory here as well. That could just lead us in, giving us more bullish until we hit this point. If we break through this area of trajectory, then I'll be looking at price action running the liquid lows shown here and interacting with the area of demand that we have shown here. Now, of course, selling from this point down is going to be a risky move, because you're looking at something that is clearly creating new higher highs and trending higher within the principle that it is clearly fundamentally driven. The war that is possibly happening in the Middle East is of course fueling this. We know what it's like whenever there's a war. Everybody piles their money into gold because it is a safe haven in terms of investments. So we're keeping a realistic mindset here that price action is most likely going to travel bullish once again. If we see a sell-off and price action move to a preferable area of demand, then we can of course look at the two areas we have highlighted. Area of demand, liquid low. If we interact with the area which lines up with the trajectory, so it would pretty much be the base of this. I didn't actually mark it, but the last liquid low you have here, if you follow this across, that's where the alternative area of reaction may happen, but we're not holding our breath for this. I ultimately believe that we're going to see the same thing we saw last week, which is price action just running high. So this short-term target, I believe, will get hit. Now, if we play this, you'll see prices playing around on this point right now. So there is potential for price to sell through, but I'm more inclined to see a bullish movement. So like I said, guys, very, very simple markups. As always, we keep things super simple. Let price show you what it wants to do rather than you pushing your beliefs onto the market. There's only two scenarios. You either sell or you buy. How long you hold that position for is going to be down to you. But please, 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 keep it simple. Stick to your risk and follow your trading plan. If no trades arise, you don't trade. Remember that every single day you stay out of the market, you are not losing money. Of course, you're not making money, but this is why so many people, unfortunately, end up on the wrong side of price. So that wraps up this week for the outlook. I hope you've all found it insightful and useful in some form. Of course, if you haven't already, hit that subscribe button, hit the like button. If you want to be a part of the Discord community, then you can find the link for that down below. And until the next one, guys, have an amazing week. And I will see you all in the YouTube live session we are hosting in around 35 minutes time. Have a great week, guys. Peace and love.